Welcome to Momentum Monday. Howard, what do you think about today's price action?
What is that? Scripture behind you? Is that like devil's tongue on the wall?
I don't know what you're talking about. I'm in Sofia in Bulgaria, so it's a
You're in
different.
Bulgaria.
I am in
Oh,
Bulgaria.
what time is it? Is it the same day? Are you trading on inside information there? Because you're looking at
We are 10 hours ahead, but the same day, yeah.
So what does the market do today since you're ahead?
It's down.
Wait a minute. It's like 10 at night and you're up trading?
No, it's 8:30 p.m. It's not that late.
For Bulgaria, that's late. Isn't there a curfew? Because you're in it's a police state?
No, it's not.
It's not yet a police state. How is the mood in Bulgaria, in Sofia?
The mood is good. Holidays are coming, so people are happy and celebrating, buying presents. The malls are full. The economy is good.
How's your parents getting along with your girlfriend?
She's not here yet. She's coming later.
Are you sure she's coming later?
Yes.
Okay. All right. Well, let's get right to it.
All right. Let's share some charts.
Let's share the nauseousness.
Yeah, there's been a lot of volatility today. As you can see,
nothing's changed. We'll walk people through here, but we are at the lows of the year as we speak. So as we speak, we're doing this midday. The market's taking out the lows of the day, Ivan.
Yes, it's trading near the lows of its range. We talked about that 260 level, how important it has been in 2018 because the market.
So we're midway through the day here. We're starting to see some real. I mean, the market is just imploding as we speak. So it's down 1.5% right now.
Down 1.4. So this morning it gapped down. It broke below that 260. It tried to rally. Let me show you like an intraday look at it.
Mm-hmm.
It tried to rally, and then it found resistance near that 260 level. So now that 260 that was support for so long, now it has become a resistance. So that level remains important, but it's important because it's resistance.
I mean,
and the main thing.
Well, the good news is we were warning people about this. This is only getting worse right now.
The main thing that changed, that is different today compared to last Monday, is that the stocks that held well in the past couple of weeks today are getting absolutely demolished. Like all the enterprise software stocks that were trading near their 52-week highs, that were setting up for potential breakouts, today they're the worst performers.
Like people were like they were performing worse than the markets. So like what Okta, Twilio.
Each and every single one of them. Look, Okta down 8%. ZS down 8%. Twilio down 4%. Zendesk down 5%. AYX.
Where's Salesforce?
Down 8%. CRM 3%. I mean,
Adobe, so it's going to challenge the lows. Where's Adobe and Microsoft? Those are really
Microsoft and Adobe. 2.5 for Microsoft.
I think it's becoming a new bellwether again, Microsoft, in terms of watching it. It's kind of Adobe's all the stocks that were like written up in Barron's is like love because they we were skeptical of the strength in enterprise here. Even though we're bullish on them, we were skeptical on this late strength. Now they're all rolling over, and Adobe and Microsoft are the two kingpins in Salesforce. If we look at Microsoft, which passed Apple as number one, as the biggest company in the world, it's into a small correction mode, down about 10% from its all-time highs. If it doesn't hold this 100 area here, you're looking at the 80s or 90s. Well, I mean 80s. Obviously, would be in the 90s, but it's just really heavy. There's not much to do except build a list. And I don't want to waste too much time boring people, Ivan. Is there I mean, obviously momentum, there is none, but what is there strength beyond utility?
Right now, the only practice is in U.S. Treasuries and some utilities, which are typically defensive assets. But there is momentum on the downside, and
this is rare. This is rare. Where I think we could spend the next few minutes just talking about. This is probably the first time in a couple of years that we've talked about momentum to the downside and how to play that. So let's flip gears and just. It's not for me, but I think there's been some great trades, and there will continue to be some great trades.
Minutes on it. So this weekend I wrote a blog post on my blog ivanhoff.com. And I wrote about how in 2018 there's still 62 stocks that have more than doubled. I mean, after today, they're probably fewer than that. But I said that after the market started to correct, many of those stocks starting to set up on the short side. And I mentioned 4 names. And today they're getting slaughtered. Like, for example, this one. These are all stocks that have more than doubled year to date. And usually, momentum stocks are leading the market and outperforming.
The short sellers that are chasing will come for these because they know there's potentially weak hands and looking a lot.
Rising, but they're also underperforming by a lot.
Yeah, I remember talking about ShotSpotter after it had gone up to like 50 or 60. Now it's quickly just degenerated. Here, HEAR, all the hot stocks have just degenerated.
So in a bullish market environment, a typical momentum stock can go up 3 to 5 times as much as an index, let's say the Russell 2000. But in a bearish market environment, they can go down 7 to 8 times faster than the underlying index. That's why all those momentum stocks, they're not a one-trick pony. If you can trade them on the short side, you can do really well during corrective markets.
Yeah, we're in a downtrend. I think it's silly to be, unless you're a nimble trader, it should be about protecting your wins, not expanding your territory. And you've really got to be nimble. I mean, Apple can't find a bottom here. We're looking at Apple.
Let's look at all the finds.
It's my biggest position over the last month. Again, well, it always has been for the last 4 or 5 years, and but relatively, as I was scaling out on the way up, it's now again become something that is of a smaller allocation to stocks. It's become my biggest position again, and it's stock has no bottom, 37 relative strength. It's holding up. It was up today a couple points, so it just so we're getting closer to a washout. This stock was up $2 today, and now it's down on the day. Obviously, not as much as the rest of the market. So I think if we rally, Apple's going to rally today as well, or tomorrow. I think the sellers seem to be, barring some news, they seem to be exhausted with and it makes sense. We've gone straight from 230
level.
Yeah, we dropped 30% right into year-and-a-half-old support. But again, there could be, it's hard to tell when the selling ends, but it feels like short-term Apple selling has just kind of exhausted itself. So let's see if the market catches up to the Apple selling. That'll be a sign of maybe you could put a trade on the long side, but I'm mostly watching today. So good. That was an interesting blog post, Ivan. Where else, if on the rallies, would you be looking to short?
I mean, I would look at any stock that is below its 50 and 200-day moving average, and I would look at that are starting to lose momentum when they rally towards their 50 and 200-day, and just would short on a 2% down day. I mean, for example, let's take a look at WWE. Like they've been a really strong stock. They probably tripled this year. They went down to their 200-day, and now they're finding some resistance near their declining 50-day. So you can go short here with a stop just right above the 50-day. And for example, it's a typical setup that I would look for.
Yeah.
What else? So I was going to mention that we are in a very high correlation phase of the market. So if there is a bounce, and there will be one, because no matter how bad the market is, there are always bounces. Usually, all stocks are very likely to move together. So if you're just wondering what to choose, you can just go with one of the ETFs.
Yeah, one of the indexes. I was just looking for any kind of. I remember Best Buy was just defying. I just couldn't understand it. It was just so strong and breaking out, and we can just see how quickly from an all-time high there at 84 in September. If we look at monthly, if we look at a weekly, it finally broke through there. This happened to so many stocks.
So
in end of December, they broke out, and then they've just, boy, if you didn't have a good discipline and taken your loss in the 70s, we are now, headed to the 40s. I mean, we're talking about a 40% decline in a leading stock, forgetting, if you liked it or not. And I didn't love the company, but I was impressed by its relative strength. We can see it's just how quickly it went from hero to zero pretty quickly. And this is happening.
The Best Buy setup has been the typical setup in the past 2 months. Look at that amazing breakout from a long base.
Volume and then volume to the downside.
Then breaking below the 200-day, and then from there it's been just a quick move down.
It's basically wiped out, what is it, 2 years of gains in about 3 months.
Yes, and
poster child for what this little mini bear market.
What's interesting about this correction is
we're not in the correction anymore. This is, you could call the index as a correction. The market's Nasdaq's still basically up on the year. So it's from the index level, it doesn't look that damaging. From a from breakout to breakdown, it's just been rather dramatic. And because we had such a good run from late 2016, it's tricking people. And you've got to really understand. I don't know what the bullet to drop is on the news that that we're not reading about on page 1 yet. So I just don't know how the market's going to react when the actual news of why we really are correcting hits. Is it the tariffs? Is it the strong dollar? Is it interest rates rising? We know all this stuff right now.
Well, the last FOMC meeting is this Wednesday, and I think anything other than not raising interest rates will cause a further sell-off. So
yeah, if he doesn't raise rates, now Trump is asking him not to, or yelling at him not to. I don't think the market rallies on that. It's now telegraphed that he's lost all credibility because the president can yell at him, and I don't know what precedent there was before, because I don't really follow these type of macro events on a general basis. But everybody's kicking the can right now, and the market's just going to do what the market's going to do. So I think you have to really have a plan for what you want to own. Go to the SL50 to wrap it up here, Ivan, and just see if there's going to be bounces, where the strength is.
Well, SL50 still has a lot of enterprise software stocks, and as I said, they were the only stocks that were looking bullish and good up until this Monday, and today they are the worst performers.
Makes sense.
I was going to mention that if you take a look at the price action in the past month, you see that every single week there is a sector that was holding well, that was just the next week was just hit really hard. I mean, we saw what happens in healthcare just a couple of weeks ago. It was looking amazing.
Yeah. Oh wow.
Close breakout down to its 200-day. The same thing happens in retail, and today we see the same failed breakouts in enterprise software stock. And there's really no other place to hide. I mean, the only thing that is doing well right now are U.S. Treasuries, cash, and the occasional utility. That's it.
Enjoy your trip. I'm not going to wear people out here. It's follow us on our blog if things change. We'll be back next Monday. I don't expect much to change unless we crash here. And in a crash scenario, it's easy to find us and ask us for questions. But this is a crash scenario. I mean, right now, it feels like we could see low 250s on the S&P today.
Yeah.
There should be another cent or two. And that would be pretty washed out short term. That doesn't mean it would be the end. It would just mean, you know, I think there'd be some nibbling by people. But again, we're in the middle of an accelerating move down, and hopefully we've done our job over the last few months of getting people, you know, ahead of this. You got to be off margin, and you have to be really careful because the new leadership, you know, what worked in this last bull market may not work in the new bull market. And even if we bottom today, it may take a few more months for new leadership, whether that's healthcare or biotech, or we don't know, something that's happening. But it's not going to be utilities and consumer packaged goods. And even in J&J, where we were hiding out, Ivan, I've been hiding out. You gave back, I don't know how much, pretty much 100% of my gains that look great buying it in the lows. You know, one of my 8 to 80 companies that we were buying at 122, 123, and was defying the market, and then boom. And I think the bigger story with Johnson & Johnson isn't so much just them. Obviously, you know, no bueno on the asbestos. But I mean, if we look at the food companies and sugar, I mean, if we're going to really start nitpicking on, and I don't mean nitpicking, if we're really going to start taking down companies 10, 15% for stuff that they've been doing for 30, or that happened 30, 40 years ago, and I don't mean the fast food companies, although they'd be part. I'm talking about the conglomerate food companies that have been shoving sugar down our faces for 50 years. So in a bear market, all this stuff comes to fruit. So there's nowhere to hide. And so I'd be really careful in chasing what's working, especially perceived strength. What really will happen once we've bottomed and once we start to bottom is true growth leadership will show. And we're just a long way from that. Okay, I'm going to end it there. Have a great week in Bulgaria.
You too.
And thanks, Marcus Smith, for the charts, helping us stay organized here. And we will see you on the streams.
Yeah.